Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. Into this video, I want to make a full breakdown of the situation that we currently have on BTC USD. Now, starting here from the monthly, what we can see is that at the moment we're testing exactly the previous high, which is the high of the previous bear market from which all this move to the downside was created. Now, at the moment, we're testing this zone from which also in the previous cycles, we have seen rejections to the upside and the creation of new all-time highs. Now, overall, I do not expect the creation of new all-time highs before March 2024, when we will have basically the next halving event, but we could expect a rejection to the upside and to go around the middle of this move. So around 50% from the high to the low of this bear market, the start of this bear market. Now, if we drop down on the weekly time frame, what do we see? From a weekly perspective, we can see how we did see a triple bottom created around this zone. However, at the same time, while approaching this area, we are currently also creating this M pattern. And in general, after the creation of an M pattern, what we would like to see is for the market to create a rejection to the upside to go and complete the pattern at the neckline, which is the previous support turned resistance. So what we could expect here is short-term bullish price action and for the market to create a rejection to the upside for a completion at the neckline. Now, dropping down on the daily, what do we see? From a daily perspective, we can see that we did get an impulse correction with this kind of horizontal accumulation, rejection lower. Now, in a situation like this means that we just created new structure. With this level of previous support, which now that it has been broken to the downside, is actually turned resistance. So what we have here is previous daily support turned resistance, and we could expect a rejection to the downside. However, since from the monthly and also from the weekly, since we have the M pattern, we would like to see a rejection to the upside, the only way in which all time frames would be aligning to the same direction is if we actually get a break back above this level, because at that point, that previous support, which was supposed to be turned resistance here, would once again be turned support at this level. And from here, we could expect a potential rejection to the upside for the completion of the weekly M pattern that we have previously identified. Now, if we go and see what we have when it comes to the on-chain data, so basically the exchanges specifically, so the reserve exchanges, so all the Bitcoins that are present at the moment on the exchange reserves, what we can see is that the black line here is the price, the purple line is the amount of Bitcoins on exchanges. We can notice how even though the price has been declining, the amount of Bitcoins in the exchange reserves has been declining as well, creating massive illiquidity that, if demand will increase, should make the price create a move to the upside to accommodate for that new demand, meaning that overall the fundamentals are very, very strong in the long term. So if we actually get the break back above this resistance and a retest, how we could be approaching this potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you do know what I'm speaking about when I say valid entries and that's this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course, plus all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the trading station software, and if you scroll down past the testimonials, you will see that at the moment I'm running a special promotion in which you have the possibility to gain access with only 97 euros. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them through the link on the student dashboard, you have the possibility to get a full refund credited back inside of your trading account. And if you scroll down, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.